Hello everybody, this is Crypto Amadeo. Welcome to my channel where we take a fresh perspective looking at the world of assets through both fundamental and technical analysis. And let's get into it. Today I intend to talk to you about a very important question, yet a very basic question, which is, are we supposed to use logarithmic or linear scale when we do technical analysis? And I think the answer is logarithmic, because logarithmic is the only way that will give us the right conclusions about a chart. And this is due to, in a lot of instances, the assets that we analyze have a very wide range of price action. Where the price action range is small, it doesn't really matter. As you can see in this S&P 500 chart, the price range right here is from 450 to 375-ish, and the time range here is kind of from beginning of May to 2020. So if I were to kind of check off this logarithmic button here, as you can see, no difference. There's no difference between logarithmic and linear scale. But the problem arises as soon as the price range starts to get big. And take Tesla as an example. Here is Tesla, right? You can see if I just show you the Tesla chart right here, if we look at the time range from also March, actually this is March 2019 to the current time, the price range is from $35 to $800, and in this kind of a big price range situation, what scale you're on matters a lot, because as you can see, these two arrows both represent this is from $50 to $350, so $300 move, and this is from 550, I believe, or 550 to 850, so that's another $300 move. As you can see in the log chart, it's represented very differently, because going from $50 to $350, even though it's a $300 move, the power of that move is a lot bigger in terms of the percentage rise, and that's what we care about in a technical analysis, in terms of a trend analysis. When we look at price action over time and what kind of trend that is forming and what kind of story that is telling us, we care about the power of the move. We do not care about the absolute value of moves. So if I take this off log, so what happens is that the chart is going to represent both of these $300 moves with the same vertical magnitude on the chart, which doesn't really help you interpret the power of the moves, historically speaking, right? So, and if you kind of zoom out a little bit, all this stuff down here becomes really hard to analyze when you're not on log, because they represent a very small absolute price change. Sometimes, let's say from $5 to $10, even though that's like 100% move, it's such a small price magnitude of absolute price change that it will show up as a very short vertical distance on the chart. So this is why you need to have log on when you analyze charts that have a wide price action range. This is Tesla as an example. I can show you a couple more. This is Etsy, same thing, right? On this chart, this is a $30 to $80, that's a $50 move, and this is from $150 to $250 move. So if you don't turn log on, it's gonna look exactly the same. It's gonna look exactly the same, which is not what you want in terms of a trend analysis perspective, because you care about the power of the moves. If you turn on log on, you'll see this is a much powerful move than this. Same thing here, a square, much powerful move than this, even though this, if you turn it off, you see that they represent the same price change in terms of the absolute price change right here and right here. So the situation is the most obvious, obviously, when you look at an asset like Bitcoin, right? If we go to Bitcoin, you'll see exactly what I mean. You see, because the price action over time is so huge that you have to have log to analyze the Bitcoin chart. Or else, if you turn it off, it becomes pretty much meaningless. And if I turn on a bigger interval here to see the bigger time frame, right? Like if I turn on, let's just 6 months, and you pretty much can't do anything. You see like a little maybe pennant right here, that's it, but that doesn't tell you much. And as soon as you turn on log though, you're able to analyze, you're able to identify certain channels, right? For example, that's a channel right there. I think I talked about this briefly in another video, but you're able to identify this kind of channels because you have log on. If you don't have log on, then that's not a channel right there. So in summary, logarithmic scale is very important for analyzing charts that have a very wide price action range. So here it is for you. And if you like this video, please click like button and subscribe to my channel, and I'll talk to you next time.